Hello, very good afternoon to you. Welcome to another Currency Direct Sterling Euro podcast with me, Keith Spittlenik. It's Friday the 15th of April. Well, Sterling Euro, we're now trading 113.07 at the moment, so yet again we're lower than where we were this time last week. Sterling's really been popping its head below that 113 level all day, well, last couple of days now, and keeps coming up for air, so we're floating just below and just above the 113 level. Tuesday this week in the UK we had CPI data, Consumer Price Index data, which is a very good indication of inflation, and we actually saw the first fall in this data since last summer really. Now, for those of you out there that were looking for sterling to strengthen, this certainly wasn't what you were looking to hear. An increase in inflation, you see, an increase could have actually persuaded the Bank of England to raise interest rates sooner rather than later, which should be sterling positive. However, this looks more and more unlikely now. Most in the market are actually expecting the European Central Bank, the ECB, to continue raising rates, but UK interest rates, they're certainly going to stay on hold for now, at least until August. What's interesting is that the market really looked at this fall in inflation, fall in CPI data as just a blip, really, in the upward march of inflation. And despite the Bank of England working as hard as they ever have, really, to suggest that inflation will come down, many in the market now disagree and expect prices to keep on rising. So what does this mean? Does this mean the Bank of England's losing its battle of inflation expectations? Well, it certainly means they're being questioned at least, and it also means the bank really has to redouble its efforts in keeping wages and keeping price growth expectations low and, more importantly, stable. To me, this all suggests more pressure, unfortunately, for sterling coming. I wouldn't be surprised to see rates heading further south in the coming weeks. For the week ahead, though, well, not much happening really. There's a lack of UK economic data, there's a lack of events, and of course we're going to have thin trading volumes as the markets approach the Easter holidays. So this should all help keep sterling really within a range of somewhere between 112.30 and 113.60 against the euro. That's all for me for this week. Please have yourselves a fantastic weekend. We won't be recording next week because it's Easter, so have a fantastic Easter also. Don't eat too much chocolate, and we'll see you in 2 weeks.